Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun. Good morning, everybody. Well, it is Thursday. Can you believe it's Thursday? I am super behind here because we got US GDP coming out here. So instead of going through the charts, I just want to note we are thick into the roll for the treasuries. All right, so you might see some weird order flow coming through here now, right? With all that said, though, this GDP news, it's the second estimate for US GDP quarter over quarter, but yeah, we'll see. And then you also get jobless claims. So we'll see if the market moves on this. We are at like 3.95, so rates have moved up a little bit. Come over to the screen. $30 seconds. Okay. I'm moving around a lot here before. Okay. So GDP slightly lower than forecast, 2.7 versus 2.9. And initial jobless claims 192 versus 200. That's interesting. Although the continued jobless claims was lower than anticipated. I'm gonna say this is probably bad. Well, it's moving down now, so that the market must think that it's bad. But it's a little fuzzy here, so I don't know if I can make a trade on this one. I don't know if I can make a call on this one. There was a lot of volume there at 30. I'm kind of tempted to take it on a reversion back to 30 there, but it looks like the volume's still kind of coming out here. So how much did they sell? 6,000 contracts? So the jobless claims, you know what? U.S. core PCE prices preliminary 4.3% versus 3.9. Is that why they got hit down so hard? Well, the S&P-500 still above 4,000 and not reacting. Well, we were in the 20s, but it hasn't reacted that strongly to this news yet. Okay, they've definitely built a big hole there at 28.5. I'm still seeing a decent amount of volume and pace coming through here. Man, it sure looks though like the 10-year wants 4%, doesn't it? Look at that. It's interesting. So, while we're kind of watching them sort this out, let's read this story. This was authored by Ven Ram, but it's being reposted by Zero Hedge. The missing pieces from Fed minutes on the bigger move debate. There is an interesting jigsaw to be solved from Wednesday's release of the Fed minutes of its meeting earlier this month. Here's what the minutes showed. A few participants stated that they favored raising the target range for the federal funds rate 50 basis points at this meeting, or that they could have supported raising the target by that amount. Participants favoring a 50 basis point increase noted that a larger increase would more quickly bring the target range close to levels they believed would achieve a sufficiently restrictive stance, taking into account their views of the risks to achieving price stability in a timely way. However, the statement after the decision on February 1st showed that there was no dissent. What gives? There are at least 8 hawks who count as participants. Neil Kashkari. Really? We're going to call Neil Kashkari a hawk? Okay. James Bullard, Chairman Powell. We're going to call Powell a hawk? Yeah, okay. Michelle Bowman, Christopher Waller, Loretta Mester, Mary Daly, and Esther George. The Fed's immediate post-meeting statement showed that there was no dissent from Kashkari, Powell, Bowman, and Waller. So all of those participants who sought a bigger move were the ones not voting. That means at least 2 or more of Buller, Mester, Daly, and George. You already done there, NASDAQ killer? Well, good for you. I haven't seen you this week. Much this week. Hope you're doing well. And let's see, it is kind of, I don't know. The action here in the Treasury is pretty whippy. That's tough action to hold stuff through, right? Yeah, we're doing okay. We had an okay trade on Tuesday, and I'm feeling really good today. Any news? Yeah, we had GDP and jobless claims. So remember, every Thursday at 8:30 Eastern time, the designated news release time, it's when most of the news gets released at least, we have jobless claims every week. So that was one. So it seems to me the market does not like jobless claims, initial jobless claims slightly lower than expected, continued jobless claims declining. So I don't think this number, the change in jobless claims here might not sink in. Okay, so this is, they're saying, okay, there's the initial jobless claims, but then how many of those people stay on the jobless roll, right? Well, they were looking for 1.7 million, and they got 1.654 million. Okay, so 400,000 people came off of the jobless rolls. That is a lot. That is, how much of that is that? Wait. Let's do some math here. Wish I had a better calculator app. Should bring my calculator over here. When we get a bigger desk, we'll do that. Okay. 1.7 minus 1.654. Oh, whoops, I pushed the wrong thing. 1.7 minus 1.654. It's a little suspicious to me that it's 654, but whatever. Okay, 0.046 divided by 1.7. Is that only a 2% decline? Wait, am I doing that right? Oh, okay. Yeah, I am reading that. So it wasn't 400,000. I'm so silly. It was from 1.7 to 1.6. So it was like 100,000 people came off the rolls. So it's not like a huge relative percentage amount, but that is a lot of jobs created. Like when you look at that number, okay, and you consider like what is that going to be on the jobs added on the next non-farms report, like that's a lot, right? So I think they didn't like the jobless claims, continuing jobless claims. But then also, when you get those GDP numbers, you also get things like the core PCE prices, and core PCE prices was expected to be 3.9 and it was 4.3. So I think that's why the market was throwing a fit on that. It does look like they're buying it back though. I had originally pointed out 30. Doesn't look like I got the action around 30 that I wanted, but you could have held it on long enough, you would have gotten it. So your blood runs on coffee. Jeez. This story about them saying that the people that would have dissented didn't vote is a little How was work? It's okay. I've been doing this big project to clean up a major system and move it over to the cloud. And I think we're to the point where we start like removing stuff and everything. So I'm excited to get that done. I got things. So I got this new board here. I'll show you here. It's like so big it's hard to pull it out, but I got my task board here. See, it's so big. It's like 11 by 17. And so over here on the teal colors are the house tasks. And I keep thinking of things that I need to do. It's getting a little silly, in fact. So I need to do my taxes. That's what I need to do. It's almost the end of February and Seth hasn't done his taxes yet. What's wrong, Seth? Seth, the software engineer. You know, when you think about it, really everything that we do is engineering. Because like what is an engineer? What is an engineer? An engineer is a person who understands complex systems and modifies them. That's what an engineer is to me. I mean, we always think of an engineer in like a technical kind of way, but like I really think that the term engineer can kind of be expanded to a bunch of different things, right? So really we're kind of like trade engineers, right? We're there to understand the complex system of the financial markets and the complex information that's coming in there, and then engineer trades that will give us profitable results out of that, right? We're engineers. So really, the way that I trade is the same way that I do software engineering. Seth is well, I'm not anti-taxation. I think that you have to have taxes, and I think that I'm always in favor of trying to improve the tax system to make it better. See, this is the whole thing that we get into is sometimes the system gets to a point where the system is so much of an interest in and of itself that it's difficult for the engineers to either one understand what the right thing to do with the system is, or B, it makes it difficult for the engineers to do what the right thing would be. So it's difficult to either understand or to do and carry out the thing, right? Like it's hard to change a system when like your living basically depends on you not understanding it. You know what I mean? So yeah. But the part of the thing with engineering is you really got to understand the system, right? I don't think that I could say that I understand the tax system so well that I'm the one that should be suggesting what kind of changes should be made on it. Oh, by the way, let me turn this fan on. We're probably better spent talking about the things that are related to changing or to trading. For instance, like that mark to market rules regarding leverage should factor in the impact of your trades. That's a change that they should make in the law that I can very confidently say would be a good decision. Because the whole thing is we think that we got these huge complicated systems, and then everybody seems to think they know what needs to change about it. Are you actually an engineer on that particular subject? Do you understand what the actual impacts of that change are going to be? Because most people don't, right? And that's the whole problem. This is what Dune was about. This is really what Dune was about. Because in Dune, oh my gosh, I'm getting so geeky now, right? The whole thing in Dune is that the Fremen, the desert people in the show, they have this plan to terraform the planet. It turns out that Arrakis actually has a lot of water on it, but it gets like pulled into the ground and disappears. And it turns out that the reason why that is that the sandworms did that so that the sandworms would have a place to live, right? So the sandworms, well, maybe somebody else did it, but the planet was basically terraformed by the sandworms. So what eventually happens is that the Fremen realize their dream of turning Arrakis into a paradise, and then there's nowhere for the sandworms to live, and the sandworms die, and then they're not making any spice, and then that results in total chaos across the galaxy and stuff, right? So the whole thing was like, or just when you're talking about Paul himself, the whole thing was that, like, okay, you go in and you start this cult, right? But then this cult gets out of control and then does all of these awful things, right? Creates a war and everything. So the whole thing was like, we aren't very good at completely understanding the consequences of the decisions that we make to systems, and that we should be a lot more careful about how we make those changes. Because everybody thinks that they have that, know what needs to happen. In your 20s, everybody thinks they know what has to happen. And then usually what happens is you succeed. Maybe you succeed with making the change that you want, and then you find out that it's not actually a good change, right? How is the kids in the family? They're doing okay. Today, Asher goes to preschool. So that should be interesting. And the younger one, Ethan, he is, I think he's getting close to walking. I think we need to start getting him, because he can stand up. He can pull himself up pretty easily now. So there's something that doesn't serve my objectives. I don't need it. Tax does. Oh, this is. I don't think you realize the ways that taxes benefit you, right? So, if you don't have taxes, you'd have crazy people in the streets all the time. Well, you kind of have crazy people in the streets all the time anyways, but I don't think that people realize, we think of taxes. Here's the thing, okay? If the things that the government was doing were profitable in and of themselves, you wouldn't need taxes to fund them, right? You just would start it as a business, right? So pretty much everything that the government does is essentially a capital sink. Like, the government does not get a return on that stuff. But that's because it's not like a product. It's not like people are directly paying for it or anything like that. But what they are doing is they are addressing problems in the society that do have measurable costs. They're addressing problems that do have measurable costs. And so even though you can't look at like the direct return on it, in the larger scheme of things, you can look at and see how much that particular thing is actually benefiting the society, right? So like mental health is a good example. Mental health is usually handled by your county in the United States, okay? But having mental health facilities helps get people with mental health problems off the streets, because that's where they would be otherwise, is they'd be on the streets, and then there would be more crime as a result. And when you have more crime, it's very difficult to have investment in your community, right? This is what's really hurting inner city communities, in my opinion, is that you have the problems with crime, and then nobody wants to invest in that community. Like, look at what happened in Portland, man. I mean, I don't want to get too political, but that whole thing with the Chaz and everything, and they wanted like less police enforcement, and they basically let like a communist commune that was basically seeding from the United States exist for like almost a year or something like that, right? And what happened? Crime in that area went up, and all of the businesses left, right? So now your economy is going down, and then it's just kind of like feeds in on itself, right? Of course, we kind of did these other problems the other way, right? So like in New York, for instance, Rudy Giuliani and some of his predecessors did a really good job of cleaning up New York. Like when I was a baby, New York was so crime ridden and everybody was afraid to go there and yada, yada, yada. But by the time that I got to New York in 2010 and lived there for a little while, they had cleaned things up so much with excessive police enforcement that it was practically like Manhattan itself was practically like Disneyland. Okay. It felt like Disneyland. And there was just police everywhere, right? But very excessive enforcement. The problem that they had over there, though, was that, okay, they fixed the crime problem, and then they didn't go in and encourage the investment in the more poor communities, right? So it was kind of all for naught. And then when you relax the enforcement and or remove the enforcement, then those communities are still doing poorly, right? So we aren't doing a very good job with our inner cities. And why? Well, because we don't completely understand the systems that we're talking about here, I think. And then people come in and they say, oh, I know all of the problems. The problem is that police are too aggressive. And then and then they implement a dumb policy that makes things worse, right? They are trying to fix the mental health of day traders. They have to go out and start working. Well, I don't think you can ever solve the mental health of day traders. Becoming a day trader is just, you just have to acknowledge that your life is going to be a little bit stressful. You're going to be more stressed than other people. Like, I mean, I don't think you can really tell too well here. Well, I mean, if I come over to the camera, my beard is pretty short right now, but there's quite a bit of gray on that chin now. And I mean, there's a lot of gray. Like, there's enough gray in there now that I could probably justify using product to like color it, you know? Okay. My dad did not get that gray when he was like 37. Okay. He did not get that gray when he was 37. So, yeah, I think I've been through a little bit of stress in my life. Yep, I'm a gray old man because of the treasuries. I mean, I think that there's a couple of other things that went on through my life. Like, divorce was kind of a little bit of a traumatizing thing for me, even though I don't think it really actually needed to be, but it was all in my head. But that was a traumatizing thing. Yeah, and apparently those things do make your hairs go gray. So, if you want to look young, don't trade. Is it worth it? Well, I mean, it kind of depends on what you define as worth it. For me, the trading is an end in and of itself, right? Like, um, I don't necessarily care how much money I'm making from it. I care that I'm getting better at it and that I can continue doing it. Those are the two things that matter. So as long as I'm doing well enough to be able to continue trading, then then that's all I care about. And then I get to trade and I enjoy doing it. And like honestly, if I wasn't trading, I don't know what I'd be doing with my life. Like you work all day and then you get to the end of the day and you have some free time. And what do? You go and you do a hobby, you do a project or something. And you know what? I definitely have to sit down and like rest and watch a show and watch the kids and stuff. But for me to really be happy, I have to feel like I'm doing something that matters. I have to feel like I'm doing something productive that matters, or I just can't stand myself. Then I'm just stuck with my thoughts and I'm just bored out of my mind, right? So to me, understanding the markets and teaching other people about the markets, that to me is the most valuable thing I could possibly do. I've gone and I've looked at it, and of course there's lots of different places where you can go and you can have an impact in the world. But the thing that we've found is the most transformative, the thing that progresses society the most is by understanding markets and using that to create opportunity for people to grow the economy, right? Yeah, I just can't sit around and watch TV. Not all weekend, at least, right? Do you see treasuries continue their uptrends in the? Do you mean continue their downtrends? You think that rates will continue to rise? I think there's a really good chance that we see. Oh, should I say really good chance? I'm pretty much betting that we'll see 4%, but you never know. In fact, I think we probably will see close to the cycle lows, or like 4.25 or higher. So this gets me into an interesting subject. If we're done talking about, I need to feel like there's purpose. I've been doing okay in the treasuries. If I sized up this strategy, I'd say that it would do okay for me. It probably wouldn't do as well as if you just put the money in a market, right? If you just put it into a Roth IRA, but that's okay. Get to trade, and I get to understand the market, and that's been really valuable. And the amount of money that I saved on buying a house because I understood what was with interest rates and everything, far outweighs like everything else, right? We're talking about like hundreds of thousands of dollars more in wealth that I have because of housing and understanding the interest rates. So I'd say it was worth it. Okay, so what I was going to say so when we were in Discord yesterday and we were talking about how the market was reacting to the FOMC meeting minutes. So the FOMC meeting minutes are kind of interesting. There was a lot in there that seemed really hawkish, but it did kind of seem like in the end, the market kind of was like, this is a nothing burger and nothing too significant happened from it, right? But in Discord, somebody made a really interesting, let's call it theory or observation, which was, he said, they're raising interest rates. It's not having a measurable impact on the economy. Like, we're now 6 months from when we were doing like the really crazy rate hikes, right? And you're not really seeing it affect the market too much, right? What's with that? Well, his theory was that you're not really seeing the interest rates affect businesses that much because the businesses had already taken out all of the debt that they ever needed. right? Interest rates were so low for so long, and then you had the whole COVID thing that any company that wanted to take debt to do things like grow or whatever it was that they were going to do, they all took it out during the pandemic, and they don't really need to offer out more debt right now. They don't need to take on more debt, and certainly not at 5%. Why would you? It's the same thing with the people like myself that bought houses. You bought a house, you're already, even with the market down as much as it is, I'm still up on the value of my house, and I got the lowest interest rate you could ever possibly get, right? Why would you ever move? Why would you ever move? Which is going to be a problem when the economy, I don't want to say if, when the economy comes back up. I don't know if the economy will be as strong when we come back up. That's kind of like my concern, is that we might be in for like a decade of difficulty. But when the markets do come back up, like, why would you sell? Why would you sell if you have such a good interest rate, right? You'd be forced to, like, you have to move or something like that, right? Different job or something like that. But it's going to be very hard to get these people to sell their houses, and so you're not going to have as much supply out there in the market because of that, right? So it's really interesting to think about. In other words, low interest rates for an excessively long period of time makes the Federal Reserve's tools when they raise interest rates less effective. Isn't that an interesting thought? And so, yes, it could be the case. I'm very concerned. So you factor that in with China is dumping a lot of money, and it seems like that they're kind of like exporting inflation around the world. And we're going into a period of time where you're going to have more money to spend than at any other time in history. This may literally be in all of human existence the time where the amount of consumption is the highest. Ever after this, the population is going to be in decline or stable, right? And so this increase that we're getting when both the baby boomers and the millennials are both able to spend is going to be the time when you're going to have the highest pressures on demand that you'll ever get, right? So that's going to be inflationary. Isn't that kind of interesting? Like, the whole thing has been like, oh, well, there's like generational level things causing inflation to be low, right? And one of them was they were saying that, the population is in decline and you need less people, then you don't need as much money out there, right? Well, I think that was kind of premature. I think that it kind of gave us a little bit of a head fake. I think the reason that the factors were so deflationary was because of the growth of China and the growth of emerging markets, right? And the cost of things was declining because of all of that labor was going over to emerging markets, right? Well, now we're getting the opposite of that as well, right? We're having deglobalization. People are realizing that the global supply chains being dependent in China and Russia and so forth is a bad idea because of the Russian invasion. And so countries are now deglobalizing and bringing more of their supply chains home. And we have rules that make it much more difficult to have those jobs abroad and then just ship everything over here, right? So I just listed 4 things that are inflationary and that aren't just going away, So yeah, I'm very concerned that inflation continues to be a strong thing and that interest rates rise higher than where they are. Like, I think that 4% is a pretty good target for now, but I'm also worried that we get into November, as late as November of this year, and are still going, oh man, like, inflation is still a problem. So I don't think that those interest rates, there's this assumption from the market, right, that as soon as the Federal Reserve gets to the target interest rate that they want, that the economy will be so weak that they will be forced to reduce their interest rates and they'll immediately start doing rate decreases, right? That's what the market has been pricing in up until about 2 weeks ago. And I don't think it's going to work out that way. I think that these pressures are going to be there for a long time. When you have to pay 1K for a cheeseburger, then you'll realize the power of gold. Yeah, if gold could ever actually manage a meaningful rally, man. It's like every time that gold starts looking good and then it gets chopped back down. Super frustrating. It seems to me that gold is a hedge against inflation and a flight to safety asset purely because of speculators. That it had the history of doing that purely because that's what people believed. And now there are more people that believe that Bitcoin is a flight to safety asset. So what happens is they throw all of their money into Bitcoin, and then eventually the risk assets get hammered enough that they have to sell in Bitcoin, and then none of them actually get the flight to safety, right? I think that's what's going on. I mean, I don't know how you would prove that, but seems to me that's what's been happening. Because when you look at this decline, I mean, Bitcoin fell yesterday, kind of had a little bit of a rise overnight, is falling again this morning, still kind of playing around with that 24K level, right? But the Bitcoin has not fallen nearly as much as every other risk asset has when the interest rates went up, right? And this is what happened before. This is what happened in 2022, right? Was that all of the risk assets got hammered and Bitcoin kind of held up, and then just it was like a slow death with Bitcoin before it like just all collapsed at the end, right? And I think that Bitcoin is kind of in danger of the same thing. You think a 401k bonds or housing are better than Bitcoin? Oh, I would rather listen. Don't put your retirement in Bitcoin. That's super risky. We had this. I need to make a follow up TikTok about this because I made a TikTok about how you need to, uh, or how you go about saving for retirement, figuring out how much you need and what kind of a growth rate you need to be able to meet your goals. And if you start when you're young, if you start when you're 20 and you have 50 years to save up before you hit 70, then and you're only getting a 5%. And the rate that you get from the S&P 500 kind of varies depending on like the time frame that you look at and the specific rules, right? So if you look at a long time frame, you factor in inflation and you factor in taxes, then it's 5%. So you're probably, if you put money into your 401k, you're probably going to get more than 5%. You might get even as high as 10%. Okay, then you're definitely going to meet your goal by the time you're 70, right? And for a long-term investor, these inflationary forces, they are not they're not a huge problem, right? Like over the long run, you are going to get your growth even with the inflation. The businesses grow faster than the inflation. Okay. Where inflation is going to matter more is more for the people whose time horizon is like 5 to 10 years. So the ones that have to be concerned right now, I think, and maybe I'm just saying that because I'm one of them and I'm concerned, is how are you going to pay for your kids' college? So my parents, they saved up and they paid for most of my school. I had a scholarship too, but they paid for a lot of my school. I'm trying to save. It's tough right now because my wife hasn't worked for the past year, and that's 20% of our income. Okay. that's a 20% decline in income, and then you add inflation on top of that. Things are tight right now. So I don't really have a whole lot to save for this for school, And then you got the inflation on top of all of that. Sucks, right? So the people that are trying to save for school, you're probably going to have to save away more for school and hope that they do something to control the costs over there. My good grief. This school. It's not an inflation hedge anymore. Those gold sellers are confusing people. Yeah, well, like I said, I think the only reason that it was ever a hedge was because people thought that it did. It was like in the 70s, we're seeing inflation. Where do we go to hide? And the only place to go and hide was gold. And so they went into gold. And so it got that record, right? Now they're like, oh, let's put it in Bitcoin. So it all went into Bitcoin, but then Bitcoin has its problems and they got destroyed. And so this time around, you had a situation where there was literally just nowhere to hide. You could go short and that was it. You went to hide in housing. I guess housing could be a place. I guess housing could be a place. Um Although I don't know if that housing would be the greatest investment at this current time, but for people that got in a lot earlier like myself cuz we got in like what, 2017 was it? 2018 when I got into a house? Yeah. What makes your house valuable? Well, it's not just stones. There's a lot. First of all, there are a lot of materials that go to build a house. So just the materials alone, to buy the materials alone to build a house is a lot of money. And the biggest cost, of course. And then there's all sorts of skilled labor that goes into a house. Like you can't just connect pipes together and have a plumbing system. You have to actually know what you're doing. Like plumbing is there's a lot to know about plumbing. There's a lot to know about an electrician. There's a lot to know about doing electricity, right? Pretty much every one of these jobs, when in building a house, contains labor, skilled labor that I couldn't do. I could probably learn how to do them, but I can't do them right now, right? Eggs, that's the new inflation hedge. Oh my gosh, I'm so mad. I'm so mad that the eggs became a valuable thing in the winter. Because I have chickens. We get eggs from them, and when they're laying, we get more eggs than we know what to do with. But right now, they're not laying any eggs because it's winter. It's so freaking cold. And then on top of that, all of the people, I mean, we don't use Purina. We're using IFA stuff, but apparently everybody that was using the Purina chickens feed, there must have been like some problem in one particular factory or something like that, and everybody said that their chickens weren't laying. Isn't that wild? At first I thought, this is just another one of those conspiracy theories. Yet no, like there was a large number of people whose chickens just magically stopped laying. And then when they stopped using the Purina, they started laying again. Isn't that crazy? And you see any like news stories about this? No. It's a little concerning to me how terrible our news media is these days. They really don't they really don't inform us on the issues that matter. Anytime there's a situation where we, the public, would like to know something, but it's not good for a really entrenched monetary interest, the news doesn't report on it. What is that? What is that? What I'm confused. I'm lost now. We're talking about eggs. We're talking about the egg crisis and how backyard chicken owners everywhere had their chickens stop laying eggs because of some problem with Purina chicken feed. Yeah, the people that were. My understanding of it is, and I've seen like literally hundreds of people. Okay, hundreds of people talking about this. They feed their chickens with Purina feed, and their chickens stopped laying eggs. And they either supplemented their diet with things like eggshells and red pepper flakes and things like that, or they switched feed, and then their chickens started laying eggs again. That's not the cause for the egg crisis, okay, but it is something that's going on that is a little suspect, right? no matter what the next currency is. I'm still not sold on that it's ever going to change from the dollar, to be honest with you. Did they lose 50% of their value? Maybe it was just because the supply came back up. So the whole thing was that there was there was a influenza of some sort. There was a disease that swept through the commercial egg producers, and they lost a lot of chickens. And it happened both here and in Europe, and that was the thing that kind of started all of that. It's not something that you hear people talk about too much, but I think that one is just because eggs is not something that like, oh, I heard about eggs. I'm really interested in eggs. I'm going to click that link, right? It's all interest. So our attention is the biggest inefficiency in the economy today, I think. The internet basically made attention the most valuable commodity, and it's so easy to manipulate our attention, and I feel that it's creating a lot of problems all over the place. I hear that coin called Garlic Coin will replace the US dollar as it collapses due to inflation. Well, you know, the people that are all in on the collapse of the dollar, they did have a big boost on that story that Iraq was going to start using the yuan for trade with China, right? So I think that you have an interesting story going on here, and there's been some big developments in it this week, and the public at large tends not to notice, right? Because there was that, and then the other thing was that China strengthened their ties with Russia, right? So despite everything that they might say, because China will say, oh, you know, we want to work together with everybody, and but the reality is that they understand that they're the underdog in this fight, and that it's to their advantage to topple the United States and become like the preeminent economy in the world, and then use that control over the currency to further their interests around the world the way that the United States has, right? I don't think it's going to work out that way. So what's the problem with that? Well, so for starters, do you really want to have all of your money in the currency of a government that just has complete control and can decide to do whatever the hell they want with it anytime? So the yuan and any of these other competing currencies simply don't have any of the factors that have made the dollar successful. Nada. So I don't think that you can just come in and say, well, you have to use it and then it becomes the reserve currency. I don't. I think that you still have to have those other factors, that your money is safe there and it's stable and all of that sort of stuff, right? So that's the first thing, right? That also kind of means that even if the dollar experiences price instability, that it's still going to be hard to topple it as the preeminent currency, right? I really don't see the dollar being replaced, at least under the current situation, unless there is like a complete collapse of the United States. I mean, like, we'd have to talk about like the Constitution gets suspended and all that sort of a thing, right? Probably never going to happen. Now, yeah, so a lot of people are kind of using, so like Ray Dalio, like everybody's in on this Ray Dalio thing, right? That the United States, they're destroying their currency, and so then some other currency is going to come along and overtake it, like the yuan, and it's going to be the same thing like how the dollar replaces the pound, and how the pound replace, you know, and going back all into history. And I don't think that those kinds of analogies really apply, because our modern world is just so dramatically different from the last time that this happened, right? Because now that you have a globalized economy, and even though we're deglobalizing, you're still kind of can't go back, right? It's people can move their money to wherever they want, right? So where are they going to put their money? They're going to put it where it's safe, and they know that there's like actual economic freedom and opportunity over there, right? So yeah, you might see the yuan become used more and more and strengthened, but I don't think that it's ever going to replace the dollar as the reserve currency. Like, I don't think that you're going to see tons of people in Europe saying, well, I don't want to invest in the United States anymore. I'm going to put all of my currency in China. I don't think that's. Then the other problem that you have here on this one is that the demographics of China are awful. Like, they don't have as many people as they thought that they did, and their population is declining faster than they thought. So, China is going to look very, very, very different 20 years from now. Very, very different. And I don't know how they deal with that. So yeah, I don't think that the dollar is going to collapse, but it's still funny to me that here we're getting inflation and everything, and the dollar is like the strongest it's ever been. That is not one that I would have ever guessed. It still kind of perplexes me to some extent. I mean, I understand why the dollar does what it does, but I'm just surprised that it can go in opposition to the inflation. So I always thought that was the strongest force in the dollar. Clearly it's not, right? Will it default in summer? Maybe. Like, here's the thing though. Okay, so first of all, they say that like the US has never defaulted. That's not entirely true. Okay. But the fact that like that's not entirely true kind of hints to you that this is not necessarily the dire life or death thing that politicians try and make it out to be, right? If the United States defaulted, okay, certainly would be a bad thing, but pretty much can guarantee you that what would happen is eventually Congress would pass a law, and then all of the defaulted payments would be made whole, right? So I don't think that there's anybody out there saying like, well, I don't know if I can put my money in the US government because they're not going to pay, they're not going to make their payments. Well, I mean, if you need that one payment particularly, then that might be a thing, but for just your regular investors, kind of a blip. It's like, well, they're going to pay eventually. You know that they will, right? So it's not the huge deal that they make it out to be, right? Of course, and you might see things like rating reports from rating things. You might downgrade the rating status or things like that, but it's not the end of the world. How is raising the debt ceiling not an implied default? Well, because what default is are the bondholders paid, right? Oh, you know what? You guys haven't been hearing the music this whole time. You want to hear music? Oh, isn't that so nice? Sorry. That's so funny. I looked down and I'm like, why is that bar gray? Oh, I muted it. Oops. I mean, the debt is an interesting thing, right? Oh yeah. You go thank Harris. He also lives here in Utah. Streambeats.com. Good stuff. And I use the hype playlist. Yeah, so I mean the thing is that debt is like future value, right? What is the limit on debt? Right? Like that's the whole thing is you come in and you have this thing where it's like, let's just say that there's no government and we're all just, we're all just living in here, creating our own economy or whatever, right? And you want to go and do something, and I have some money, so you go and borrow my money, right? Well, that's future value. You're supposed to pay it back. I'm not gonna give you the money unless you pay it back, right? Everybody thinks on that analogy that like that's how it works, right? Somebody has to have the money and then you go and you get it, right? Well, here's the problem with that. There wouldn't be enough money. There wouldn't be enough money to grow the economy. People wouldn't be able to do what they want to do because there's not enough assets actually out there laying around to do things. And a lot of those assets aren't liquid. They can't, you can't run the economy out of that. So you have to have future money because the demands, the demand for money will always outpace the supply. Will always outpace the supply. And when the demand, when supply becomes such a constraint that it impacts the growth, then you get like a recession, and then you get a depression, right? Then you get a situation where like nobody can do anything because there's just no money to do anything, so they don't do it, right? So you have to create money. The question is just how much should you actually create? What is the optimal way to deal with that? And that's why we have the Federal Reserve, is to try and balance that out based on the current situation. But, it's a very imperfect thing, but it's the best system that we've been able to come up with so far, and we're making it better all the time. It's always going to be like that. So I don't know. Is there what should be that limit on the upper end of that? Well, I always kind of thought that it was 100% of GDP, and we're kind of past that now. So maybe like stop printing the money. Yeah. We'll see. So we did see, by the way, a little turn in the dollar here. Kind of looks like we had that initial news move and then the dollar retraced. And as the dollar retraced, we see the treasuries retrace and the S&P-500 retrace. And it's starting to feel to me like that even though I think that we're not going to be at 4,000 for very long, that they may make it at least until the end of the week, if not the end of the contract, above 4,000. Your crypto is pumping. Which one? Is it Garlic Coin? It better be Garlic Coin. Is Garlic Coin pumping today? OP Optimism? I've never heard of that. Oh, that's not a bad pump. Yeah, it's at $3. Wait, how much? There is 12 billion market cap. Really? Well, your coin is like way more better than mine in terms of market cap. Where is it? Where does it say? Okay, rank 1447. Optimism is 74. 74. Well, that sounds like maybe you want to sell it. Let's see here. How old is this coin? Huh. That coin's done not so shabby. I think the reason, so like when you come over and you look at Garlic Coin and you look at like the chart of everything, it's like, oh, it did really well at the beginning, and that's because Garlic Coin was in reality a pump and dump. Or it was they made the coin and there was people that were basically planning on dumping the whole time. And once the savvy Bitcoin people realized that's what happened, they weren't interested in participating in it, right? The thing is, though, with Garlic Coin is that it's a very low supply coin. So what that means is that any kind of uptick in demand ends up being really, really extreme. So if Garlic Coin were to like take off again, I think they could beat that 20 cents out really easily, right? If it happens again, you'd have to, it would have to probably be. I don't know if it would do it organically or not. I mean, you could get the case where because of the halvening and all that, because this one kind of started after a halvening, right? After a halvening, maybe that could constrain the supply enough that we could move up, and then that could create enough momentum to get on people's watch lists and people pick it up. I don't know, but I think that the more likely way that it is to happen is like somebody famous says, you know, like Elon Musk comes in and makes a joke about garlic coin or something like that, and then it takes off, right? And if that ever happens, if Elon Musk ever decides to come in and say something about garlic coin, it would pump harder than other coins because the supply is so constrained. So maybe someday. But this one looks good. It doesn't look like this coin has been around for very long, though. Oh yeah, it would be like if Elon tweeted about it, we would be like at $5, like instantly. Because like realize we're talking about a coin that's like worth a cent, and that feasibly, if it had the popularity of other coins, and it kind of has a community and other things about it that it could become popular like that, right? You're talking about something that could be worth $200, right? Like you're talking about 1,000,000% gains, sort of a coin, if it ever happened. I don't know if it'll ever happen. It seems so fantastical that maybe it's never going to happen. But well, we're going to get back to the prices that we were at yesterday, because 07.5 was a popular price yesterday. We spent a lot of time. So remember yesterday, we spent a lot of time in the 07 area before having a spike higher that then sputtered out pretty quickly. So let me come back here. I don't know if I prepared myself super well today. We do have 7-year note auction. Okay. And that's the most significant thing we got on the calendar today. Well, how consistent has this buying been? Oh yeah, it's been really good. You know, I haven't been sitting here. So normally, you know, I want to have some expectation of which way it's going to go. And I didn't really have that today, so just kind of been yapping and haven't really been looking for a trade. There is certainly enough confluence in all of the treasuries moving along in the same direction, and the volume on all of them being up pretty good. And a pretty strong amount too, about 15K since the bottom. We very easily, based on the order flow at least, could have justified a trade here. So it's good to have some optimism in current times. Well, so here's the other problem with garlic coin though, right? Is that in order for me to make money on it, it would have to be more than just a flash in the pan, right? If like somebody comes out and says something about garlic coin and it like pumps for a week and then it all dies back down, then that doesn't really help. And garlic coin isn't on very many exchanges, things like that, you know? Like if garlic coin all of a sudden for some bizarre reason, Coinbase decided that they were going to list garlic coin and you could trade garlic coin on Coinbase, then it would be a different thing, right? If garlic coin was listed on Coinbase, that'd be another one where I think you could get to $50, $100 real quick, right? And then there would have to be enough activity in there that over a long period of time I could get out, because right now my impact would decimate the coin. And unfortunately, that's kind of what happened. Was it last year or 2021? I think it was in 2021, so it's been longer than a year. There was a pump, and somebody that had a bunch of money in it decided to take their profits and run. And if they hadn't have taken their profits, I think that it would have gotten a lot bigger. It's not out of the question because Coinbase lists so much crap, right? Well, you know what? Every time that I go on LinkedIn, I visit LinkedIn every day to go and read what my favorite quantitative researchers are saying. I get so much interesting stuff on LinkedIn. I wish I had more time to spend on it. I need to my next little project, because I've been reading this book. But man, you go in and they're doing statistics, and they'll use so many terms that I'm not familiar with. You know, like they'll talk about a certain kind of mathematical distribution that's like, well, I'm not familiar with that one, and I'm sure that hopefully it's pretty simple to you just go and look it up, and it's like, oh, okay, that's not a big deal. But and the other one is like the symbols, right? Is when they start using a ton of math symbols, it's really easy to get lost on what does this mean and what does this mean, right? So I need to do a little bit of memorization. Memorize all of the common Greek and Roman symbols and how they are said and what they typically mean in finance is, I think, some memorization I need to do. But I digress. Get lots of good stuff on LinkedIn, okay? And every day, it used to be, hasn't been the case for the past few months, but it used to be there. Every day I'd get on LinkedIn and it was trying to convince me to apply for Coinbase. Because I guess they have an office here in Salt Lake or something. I don't know what the deal is, but it was like recommending it to me a lot. And I'm like, well, and this was 2021 especially. It was like, well, Coinbase is the last place I want to work right now, like right as they're going public, because I bet you they're going to go public and that's going to be like the peak for their company for a long time. So there's lots of problems over there, right? So I'm glad that I didn't do it. But at the same time, I also kind of look at it and some of the other things that they've said, and I'm like, well, yeah, but if Seth worked at Coinbase, maybe he could convince them to list Garlic Coin, right? Maybe he could convince them to list Garlic Coin, and then, because I tell you what, when it happened before, when it pumped before, I looked at my wallet and it was scary to me. Like I was sitting there like realizing that even a tiny little pump like have made such a big impact. And that wasn't even a tiny fraction of what I think it could potentially do, So seeing those numbers, because I came in and it was like in the tens of thousands, I was like, this is getting out of control really quickly, guys. What am I going to do? Because there's not enough liquidity on the exchanges to exit. No way. Books are thick across the strip. Well, you know what, Octavius? It seems to me that ever since they switched at the end of December, that there's just been more market making out there, right? There was a couple of days like at the beginning where it was a little sketch because it looked like one of the market makers decided to not participate on certain days, like certain news events and everything. But ever since then, there's always been about 2,500 on there. So I think that liquidity is sticking around for a while, and that we're back into our normal range. I should be careful with that because last week we had contracting volatility. I've seen a couple of things this week that kind of suggest to me that I don't think that we're clearly in like an expanding volatility regime all of a sudden again, but just that if volatility does increase, it could do so very, very quickly. And as such, if we see a decline in the liquidity in treasuries, it could disappear very, very quickly. Right. But I do find the having the liquidity here a little comforting, right? Like I don't sit here and go like, oh, we're gonna go to 4%, 4.25%. That's gonna be devastating. What's the treasury market? I'm not so concerned about that anymore. And so I kind of feel like that whatever happens is probably not actually gonna be that bad because the market makers are still there. That could change very quickly, but it is encouraging, isn't it? I don't know why that reminded me that of this other thing. I don't know if I haven't heard from Akshay yet. I've been waiting for Akshay to come in because we had this thing. We were looking at this thing at the end of the stream, and so I went and did something with it, and it was really interesting. We'll wait till he comes. All right, let me give you a reason to stick around. I did some back testing. And it was really interesting. I was right, but it was really interesting. So you want to stick for that. Yeah. I just don't like the crypto market in general. Like I was saying the other day, Like, I was thinking about making a TikTok video about Bitcoin and how I feel that it's vulnerable here, but I decided not to because I just don't want anything to do with the crypto community anymore. If they come out with a digital dollar, I'll be all over it. I'm concerned about a digital dollar. I don't think that they're going to do it the right way. It seems like there's a lot of absorption on the bids there, don't you think? You know, that offer at 05. So this is a perfect example of what I was talking about yesterday, where you tick up. Like, there was some volume at 05 half, right? And now there's 2,500 sitting on there. If we tick back up to 05 half, I guarantee you that a lot of that is going to pull. Like, but when you look at it on a Vista chart, it looks like, oh, they ran into some liquidity and turned the other way. And that's not always necessarily what happened. It's just what it looks like in retrospect because of the way that that chart works. It's not granular enough to really see what happened. That's why you have to watch the DOM, I think. It seems to me like there's a decent amount of selling coming in here, yeah, at least into the 10-year, but that the bids are absorbing them. So I feel like that there's something else we were going to talk about, and I'm kind of like lost. It's only been an hour. I do think so. My wife is going to have to take the kids at 9. Should probably shovel the walkway. Maybe I should just go do that right now. Maybe I shouldn't do that. I don't know. I feel conflicted. Nothing's. Well, let's give it the 7:45, and if I'm still feeling like things are pretty quiet and there's not much for us to talk about, then I'll go and shovel for a while, and then hopefully by the time I get back, we can go into what I found in my back testing yesterday. Number of Americans on jobless benefits hovers near 1-year highs. Yeah, and then Zero Hedge saying Q4 GDP revised lower as core PCE unexpectedly comes in hot. Yeah. Oh, let's see here. I missed the tweet from Nick Timmeros. The FOMC's median projection of core PCE inflation for 2022 in their December submission was 4.8%. Those projections drew some skepticism at the time they were published because they were seen as implausibly high. And yet, what did we get? We got 4.7. Wasn't it? 4.3? 4.3. We got 4.3. Good observation, Tim. Nick. Not Tim. I mean, it's Nick Timmeros, but... If you engage a fool, you are an optimistic, pathologically optimistic fool. Sounds like me. Sounds like me. Man, that was Nassim Taleb. I haven't heard much from him lately. Was there anything else on Twitter that I missed? Here's Brannigan had some comments. A history lesson so you won't be naive about what comes next. You're seeing the ECB main refinancing rate in blue with German Schatz in purple. What is the German Schatz? Is that is a certain type of rate? They call it the Schatz? Okay. You're going to have to explain that one, Germans. You're going to have to explain that one, Germans. Trichet was a hawk, Draghi and Lagarde doves. At the inception of the euro in 1999, rates had to be higher given risks around a new currency. The financial crises and euro sovereign crisis embedded a stasis in growth in Europe. Effectively, Europe was following a similar trajectory to Japan. What matters in the chart and the key lesson, in 2015, the ECB began the experiment of negative rates and quantitative easing infinity. This created a period of, quote, stupidity where investors were happy to borrow money to the German government in exchange for the credibility stamp. This year, the ECB is projected to move its main refinancing rate to 4% and possibly higher, as well as a gradual quantitative tightening. The implications of this is hugely significant. For one, the days of speculating are over. The days of easy real estate flipping are done. The days of being paid for being in the right place at the right time are done. The reality is, opportunities now have to contend with the cost of funding those opportunities. This is the new reality. We are now in a world that few have ever experienced. What unfolds is impossible to forecast, so best keep an open, humble mind. There are fireworks in the making. This time is different. Sit up and pay attention. That doesn't sound very bullish, but you know, who knows? There was a little bit of crypticalness in there. Oh, Day Trader had a new release. Let's go check that out. Looks like it's just a maintenance release. What version am I on, by the way? I think I'm on 10. Oh, I'm 4012. This is a maintenance release that focuses primarily on charting, memory, and CPU issues. Oh, that might be good. Maybe they fixed that problem that I had. What did I say I was on too? Oh, I'm a couple releases behind actually. Okay, so since then we've got a bunch of stuff that doesn't apply to me. Wow, 106 had a lot of fixes to the charts. CPO. We could not get any seconds data from CQG. We were missing cumulative delta data in all APIs. We were receiving errors not being able to subscribe to a symbol. CQG seconds data was not updating in real time. When we closed the chart, we were not unsubscribing to the symbol and not releasing the memory. We're not looking. Oh, that would be bad. We were only able to load one single day from Rhythmic when we had cumulative delta plotted on the chart. Well, I think I might have seen that one. When loading an hourly chart with cumulative delta plotted, we would see excessive memory usage. Okay, so nothing that really would affect me per se. And I would say the volume's still kind of sideways here in this location. Okay, well, it's been 45 minutes. We're still relatively quiet, so don't go anywhere. You're gonna want to see. I'm telling you, man, you're gonna want to see these back tests. It's kind of funny stuff. But I'm gonna go and shovel the driveway, so I will be back in maybe about 30 minutes. Okay. All right, we're back. Oh man, everything looks a little reddish to me because I've been outside and it's all blue. Well, it looks like after I left, we had a pretty aggressive move up, didn't we? Like as soon as I walked away. That's funny. But they are still at 07. Kind of the spot we were identifying before they liked. Deltas, though, are still a little fishy. That was about a 5K move. Biden will nominate former MasterCard executive Jay Banga to lead the World Bank. Okay, never heard of him. Let my head dry before I put the headphones back on. How are we doing over there? I think we're okay. Hold on. Yeah, we're good. All right. A little quiet of a stream of this because I disappeared. Okay. Well, it does look like they want to continue pushing up, though. I don't know. I don't know about this. So did that impulse start 6:45? S&P-500 started on an upturn, and we had a drop in the dollar. Yeah, we had a drop in the dollar, and that pushed the treasuries up. And the dollar's starting to drop a little bit again, hence why the treasuries are kind of maybe front running it a little bit. How's the book map? Well, so I would say that it's sufficient. I don't think that their DOM is as good as the Jigsaw DOM. I also don't think that like their visualization is really all that. I don't think that it gives you that much edge. I know that it's really cool when people like it, but I think it's a little overhyped what it can actually do for you. Really, like, we just keep coming back to this, don't we? You know, there's a lot of things that will happen that have to do with just like stacking and pulling at one price, or, you know, like they come up to a price and then they go away from it, and how much stacks when you move away from it, sort of a thing that you really just don't get a very good visualization of when you're using those Vista charts, book map charts. So I really don't think that those charts are a substitute for watching the DOM. Is the main thing I want you to get out of that. Yeah, yesterday, well, it started in the evening the day before, but man, it sure snowed a lot yesterday. We got about a foot here in Utah. And I didn't get as much as other people in the valley did, so. And now this morning, when I went out to mow my lawn, it was my driveway is a skating rink, and I did shovel it, you know. Hopefully, though, when the sun comes out, that will probably evaporate pretty quickly. So, well, I feel really tempted to go and take a long here, but the volume still looks a little iffy to me. There's a big jump in the Japanese yen. So we should come back here. Was there news of some sort? I need to go back to the last 30 minutes. I only looked at like the last headlines. Okay, Bank of England sells 649 million of bonds in auction. Okay. Banking regulators in the United States have warned banks about the liquidity risks associated with certain funding from crypto asset related entities. Deposits from crypto entities for customer benefit as well as stablecoin reserves may be volatile. They really have to tell people that? Okay. It's hot in India? Is it now? Does it ever snow in like where in India? Like, I know that there are parts of India where it snows, but like where most of the people live, does it ever snow there? Hold on a second. I thought I heard the baby, and I'm like, oh, that sounds like he's at the top of the stairs or something. I should check that. And it's not. It's just him crawling, and he's outside the door. Sam Bankman-Fried, the founder of befallen crypto exchange FTX, has been charged with 4 new criminal counts, including allegations of illegal political donations and bank fraud, an indictment unsealed in Manhattan federal court revealed on Thursday. Only northern India gets snowfall. Majority of Indian states don't have snowfall. Gotcha. Interesting. India is an interesting place. I feel that for people that live in the United States, that India holds more mystery to them than other places in the world. I feel like that anywhere in Asia was just very foreign and people weren't very familiar with. But I think people have become more familiar with like Japan and China and stuff like that. But India is still, I don't think that people really understand a whole lot about India. And I think it's a really interesting place, especially with like their political history and everything. Like, Indians have a lot of the same cultural values that Americans do, like very much so. I don't think people realize. I always got along really well with when I worked for Goldman. There was a lot of Indian people that worked there, and they were fun. We had fun, but there was so much about it that like we just can't even, you have no comparison to in the United States, like, yeah, okay, in the United States we have racism, but in India they have like this caste system, and like there's so much to know just about their caste system. It's like it's crazy. It's crazy. My son is 2, and he's doing the same thing. My office is in the basement. He stands at the top of the stairs and just, yeah. Well, this one's kind of weird because my older son has some sort of developmental disability. I wouldn't necessarily put it into autism. Maybe it becomes more apparent that it's autism later on. But right now, I don't think that I have enough to say it's autism, because to me, the key thing that really characterizes autism is the difficulty and reluctance for change. They don't like it when things change. I don't know if that's Asher. So maybe he's just severely ADHD, but that's what I just say. He has some sort of developmental disorder. So when you look at like all of the common kind of like milestones that a kid will hit, they're kind of on. I mean, he hit them up until about 9 months, where Ethan is right now, but they're always like not as strong. It was like, yeah, you get him to say mama and dad, but then he'd like do it one time and then you never hear it again. Whereas with Ethan, it's like now every day he will say that and he'll call our names, right? And so it's kind of weird to me to see the things that Ethan are doing, that it's like, because Asher, there's all these benchmarks that he missed, and now Ethan is showing them. Like, I'm literally looking at a situation here where Ethan will start speaking before Asher, even though he's 2 years younger. It's a little bit of a jump up there again. When it's moving up, it sure moves, doesn't it? But the dollar is just getting creamed here. Not quite sure I can explain why the dollar is getting creamed so bad this morning, but I think it's a little bit too late for me to try chasing this. Do you know about dates? No, I don't. I mean, I know generally that the thing is in there, but like I can't go through and like I think that's actually the first time. I'm assuming that that's the caste system, right? Date, also previously known as untouchable, is the lowest stratum of castes in India. Dates were excluded from the fourfold Varna system of Hinduism and were seen as forming a fifth Varna, also known by the name Panchama. Is the lowest. I gotcha. See, I don't know like the different stratuses or any of that. I just know that it's like a big problem over there. This is where I get into these weird things. Like, I don't know if I really want to talk about this. No, let's just keep talking about India. Tell me more about India. So certain areas have more of different dates, Dalits, right? Am I saying, oh, it's a Dalit? Okay, there's an L in there, Dalit. Sometimes I talk to the scam callers about India when they call. Oh, that's what they were telling me about Dalits. Actually, yes, and are outside the caste system. Okay. So there are basically five castes then? I thought there was more than that. Sometimes they'll chat about stuff. So we get so much spam on our Discord, and I strongly suspect that it's like a call center in India. that every time that somebody comes in and spams, it's like a different person from the call center, because they'll like run into the same issues with my filters and stuff like that, which kind of suggests that it's like different people every time, right? If you go strictly by the rules, if you eat cow, even if you are in the highest case, the Brahmins, you become a Dalit. Oh, wow. Really? No, Brahmin, that is a word I've heard before. Because, oh man, I tell you what. It was interesting to one of the things that was interesting to me, because I couldn't tell, but it was like based on how fancy your name was, they could tell which caste you had probably come from. And most of the people that would come over to the US and work in the US and the finance had the fancy names. So like there was this one guy that, oh man, everybody liked this guy. He was just a good guy, and he was nice to everybody, and I got to be pretty good friends with him. And his name was Priyadarshan, which was like, oh, he must come from a nice family, because that's a fancy name. I'm like, oh, really? Okay. People from my state don't even eat meat or non-vegetarian, really. Oh, so that reminds me. Well, we got Akshay here, so I've been waiting. I didn't forget. It was, I was all in on the thing, and I'm like, I'll show him. So I tell you what I did. I backtested it. I did our little setup with, when the Treasury ZN goes up and ZB goes down, and like I just created a strategy. I was like, well, let's just do it as it'll just go long. That way we can see like how often it actually happens, right? So there were two things that happened that I had not considered when we were going over that. One was that there is actually somewhat common. Let's not say somewhat common, but let's say sometimes there will be a change in that spread over the extended close. like that time between when the extended session ends and restarts, like that hour that everything is down, when things open back up, you can see that divergence, and that's more common. So in my strategy, I actually programmed it up so that it doesn't do that. It has to wait 5 minutes before it can trade. Okay, but then the other one was in news. So it's certainly more likely to happen when there's like big news, right? That said, I went back to 2016 and using the qualifiers that we had originally talked about, which is like one is up 8 ticks and one is down 8 ticks, and doing it on like whether it's a 5 or a 30-minute time period, literally only 3 occurrences. And when that happened, then I realized, oh, yes. So what had really happened was the strongest one I had ever seen. I had UB open when I put that event on. Oh, there you go. Okay, so I'm right still. It's only happened 3 times with when it was 8 ticks. Okay, and I think that what happened is there's one, and I still can't find it. I don't know how I would program up to find this situation, but there was one where like the ZN stood still and the ZB went down like 16 ticks or something like that. It was like really crazy. Okay, there was that one, and then what happened was during the pandemic, there was a couple of situations, especially when they were like reopening in June, when you had where the treasuries went in complete opposites like that off of news. And those are the ones that I'm remembering where I was like, I think that there was maybe a 3rd and a 4th instance of that happening. So those were the 3rd and 4th instances. So it only happened 3 times. Okay. But, and this is where it gets interesting. Let me show you. I programmed it up, with all of the parameters and stuff so that you can kind of randomize them and everything. So like 8 ticks, yeah, not going to happen very often. But what if it was only 4 ticks or only 2 ticks, right? And what if you take a trade off of it, right? Well, and that's where. So I started doing these back tests, and I did 3 of them. I did one on a 1 minute, a 5 minute, and a 30 minute. And, well, let's pull up this one on this 5 minute one for starters. See if I can get it to show up here. There we go. Okay, so I just want to know, like before I say anything else about this, okay, the Sharpe ratio on this is absolutely terrible, okay? The Sharpe ratio on this is absolutely terrible. Now, I don't have any risk management in this. It's basically like, so here's the trade, okay? If there is a divergence between the 10-year and the 30-year, so it doesn't matter if the 10-year goes up and the 30-year goes down, or if the 30-year goes up and the 10-year goes down, okay? But either way, you just go short the 10-year. That's what the strategy is. If there's a divergence, you go short the 10-year. And I did set it up so that you can change which way they go based on everything, but it pretty consistently what worked best was just shorting the 10 years. So my read on that is when you do get a divergence in the spread like that, just go flat. Just go for a flattener, and it tends to work out. And this is like, it takes the trade and it holds it to the end of the day, which is what makes it really interesting to me. Okay, you take the trade and you hold it to the end of the day. No. You just sell 1 ZN. You don't even do anything with CB. You just sell 1 ZN. Okay. I know. This is so stupid. Like, this is so stupid. But like, okay, so here it is for like 5 minutes. And here on this one, after 768 trades, it's not terrible. It's not terrible after 768 trades, right? I mean, $20,000. The Sharpe ratio is terrible. The profit factor isn't very good, but like, it works, right? And where it starts to weird me out is like, okay, so this one, there's only 50 samples on this one, but it wins 58% of the time? Like, what? It wins 58% of the time for real? Do the same thing, but 1 ZN and 1 ZB on opposite sides. I am not sure. Well, I'd have to try it. I think that the backtester can do that, but I was just thinking around it and I didn't take it through that seriously. The conditions are ZN moves up, ZN goes down. So, well, here, let me do it this way. Let me just show you the code. That'll be more clear, right? Yeah, we could try doing it with the actual spreads and see if that improves or doesn't improve things or what. The other thing though is on this one is like if I start to implement, so like if you come down here into the summary, so first here's the analysis of it. Okay, that one's terrible. Let's go back up to this one that's 768 trades. Okay, like especially since 2020, it seems like you've gotten a pretty good, like it's working for some reason. Probably just because of the flattener. So that's the first thing, is that because we mostly are flattened, maybe that's why it works out, right? But then when I come in and I look at analysis, MAE and stuff, right? Like there's a lot of really big outlying sellers, adverse excursion ones. So like I could limit this to 40 and like look at how many bad trades it would take out versus how many good trades it would take out. So putting stops and targets on this would probably make a pretty significant difference. If I brought in a target in here, look at how many losers I would get turn into winners if I did that, because this is like holding it till the end of the day. Right. So if I come in and start doing things like taking excessive risk and so forth, you probably could cheat and get that Sharpe ratio up, right? I would say cap your data from 2018 onward. That's when ZN started settling around 7-year mark and TN started breaking away. Yeah, I'm the back test goes back to 2016 is what I did, because that's as far back as of the data as I think it will let me see. So if I come back here to this trades right here, and my first one is in 2016. Okay, I think there was one that was better. So if I come over here to the 30-minute back test, yeah, I didn't care about that so much as it was like how far back will it let me go. I might be able to go back to 2008, and I would do it if I could. Because if there was a change, then you'd be able to see the change in your stats too, right? Yeah, so like this one right here. So here's one that's literally 60% win rate. Like what? How does it do that? Well, I mean, there's only 41 samples on there. So that's enough to be more than like on a Gaussian distribution to show the distribution, but on a fat tail distribution, probably not. And since we are like holding till the end of the day, this thing could have really crazy fat tails so you might not see. Right. Okay. So you gotta be careful about that sort of a thing. But still, it's not bad, is it? Oh, actually, maybe it was on a 1 minute. Yeah, I don't know. There was one on the 1 minute where the distribution looked really good. It was just really good. But isn't that funny? I wouldn't necessarily like. I think there's a couple of things that are sus about it, right? Like the fact that it tends to work better if you just go short ZN kind of suggests that you're just going flat, right? And that it's working because in general, the treasuries tend to flatten more, right? But it's still some interesting stats, isn't it? And I found it really interesting that I could get statistics like that off of such a stupid simple setup. Like here it is. Here's the you asked me about the setup. So I'm saying if ZN is up 8 ticks and ZB is down 8 ticks on the last bar, then I take a trade. And I have these things in here to say, okay, if I have this variable set, go long, and if I have this variable set, go short. So that you can backtest, okay, what happens if you take this long? What happens if you take this short? And try and use machine learning to figure out the best way to trade it, right? And then this one is if ZN is down and ZB is up, right? So the two opposite sides of the coin. What I thought was really interesting was that it didn't matter which one was up or which one was down. The correct thing was still to sell ZN. So that kind of makes it a little bit sus, I think. And again, like some of the ones that looked really, really good were didn't have enough samples. So this 194 isn't too bad. Good profit factor and everything. But it does kind of suggest that we could do some more investigation in there. Try hold till the first delivery day instead of end of day. You mean don't close the position at the end of day, end the position when it's first delivery? Oh, I don't know about that one, man. No, it's just ZN. I mean, we could try it with ZF. I don't know if it would. The difference between ZF and ZB, that would be a little weird. Okay, I'd have to think about that because I'm not 100% sure how I would calculate the delivery day. I know we can do it, but I would have to look at the rules a little bit, right? Because there's a lot of edge cases in that where, you know, what happens if the delivery day is on the weekend? What happens if there's or we're talking first delivery day, not first call. Okay. First delivery day. No, I know that, but for some reason when you said first delivery day, I heard in my head first call, and I'm realizing, oh wait, those aren't the same thing. First delivery day would be different, huh? Because it would just be the first day of the month or the first business. You know, if that fell on a weekend, then it would be the first Monday after that. So that might be a little bit better, but wouldn't that just make the results even more random? Wouldn't that just make the results even more random? I don't know. We could try it. We could look at it. I guess the whole thing I'm saying is that once you take a strategy to something that holds trades for multiple days, it's like a completely different world, right? It's a completely different world. Oh, so how do you come in and say like, okay, so like what happens if the signal gets triggered on the first day of the delivery month? Then what do you do? Oh, you know what? The expiry might be in there, in fact. So I might not even have to do any math or anything. I might be able to just get a look at the contract and get that from the contract specs. Okay, so if it happens on the first day of then I open a position and I hold it through the whole contract then. Okay. Easy enough. How much? Well, I don't think we have enough time to write it, so I won't start yet. Maybe I'll do it later today. What would your advice be from an education standpoint? A bachelor's in finance or... So you're going to say bachelor in computer science? I think that it's easier to go to school to code. In my opinion, it's easier to learn how to code on your own and get into the industry in coding. So like, yeah, there is so much demand for quote unquote coding out there because like practically every business needs it now, that there's like all of these free online courses that you can take and also so you can, like, Google has done this, right? They made this whole program that you can go through online for free. And then at the end of it, you get a certificate. And then Google said, and we're going to hire people with that certificate because we think the certificate is enough and we want people to be able to do it without having to go to university for computer science. Okay. So it's a lot easier. Meanwhile, on the finance side, you can teach yourself a lot about finance, but you can just notice like myself versus Akshay, for instance, right? My knowledge is a lot more spotty. There's lots of little holes and I don't know where they are. But then more so than that, like actually getting into a finance place, okay, like if you learned all this stuff on your own and then you tried to go and get hired at Goldman, like good luck. It's going to be really hard to get in, right? So, yeah. But, okay, yeah, and he's ahead of me here. The other thing that I was going to say is that there's kind of this... trading is kind of in this weird spot where it's not 100% clear what the best credential to get is if you want to go into professional trading at a bank, right? Because Akshay is right. If you do a bachelor's in finance, what happens to you most likely is you do something in the back office or you're sales, right? And a lot of trading is kind of sales. So, yeah. But that's where it gets into, okay, well, maybe what you actually want to do is you want to be more of a quant. Okay. And then what kind of quant are you going to become? You might not know yet. And what is the best schools and everything to go into for that? I don't know. But the chances are if you do a math major or you find a quantitative finance program, or even if you do physics, and you really, really are interested in finance and you do all of the research and know all of the models and stuff like that, you could find your way in. So that's, if I could go back and do it again, I think that I would probably still have done computer science just because, just because I'm so good at the coding and that really is like my primary skill. But I would have tried to do like a math side major, and I would have tried to have gone to a graduate school, like learn computer science and then turn around and do graduate math or something like that, right? So I have a computer science degree. Yeah. But that's the thing, is that the advantage of the computer science degree is that you're going to come out of school and you're going to be making six figures. You really will. Like by the time you graduate, that's probably what salaries will be at that point. But, you know, I was straight out of school. They immediately started paying me a good 10% above the median wage. And then it was only a few years before I was making six figures and was in top 20% earners or whatever. Like, it's just, the computer science is the best bang for your buck, right? So for me, it's kind of like, if I had gone into finance, so like if I had done a finance degree, I highly doubt that they would have hired me as a trader. I'd probably end up being in the back office somewhere, right? If I had done quant finance, then that would have been different, right? But for me to have done quant finance would have been a graduate program, right? So that's where I'm saying you can, it's possible to still do computer science and then turn around and get into a quant finance program. That can happen too. So a lot of this is going to depend on like which schools are available to you, right? You know, like if you have a state school and it's cheaper for you to go to that state school, then that's, you know, the monetary constraints on you are probably going to be the biggest deciding factor, and you're probably going to end up going to the in-state school. And so you kind of have to work within the programs that they have at that school and decide what would work best for you based on that, right? Right out of high school, I went to college for network administrator and computer security. Wow, what a different version of, wow, really? I never understood that going to college for university for networking and stuff. I'm like, why do they teach you for 4 years on that? Like, I know there's advanced stuff about these protocols and everything, but it just doesn't seem to me like stuff that you learn at a university. I don't know. Most quant finance masters are pretty much coding plus stats plus derivative pricing. Yeah. Yeah, that's the idea. Low education costs via state. You are inspiring. Thanks for the knowledge shared. Yeah, thank you. I really wish that I was like able to come in and say like, okay, this is what you need to do. Like, this is the school you need to go to, or this is the program that you need to take. Or in a lot of disciplines, it's like that. But in our discipline right now, and the knowledge that I have, I can't give you a completely straight answer. So all I can kind of do is tell you the kind of the considerations, and you're going to have to go to your school and talk to them about it, right? You're going to have to go to your state school and say, well, I want to be a trader at a bank. Well, okay, here's the best path we have for that here. They would know more. They'll laugh in your face, to be honest, if you say I want to trade for a bank. Maybe. I don't think that the guidance counselors at my university would laugh at you. No. They might say, well, the options here aren't very good. Probably not going to get into Goldman Sachs because they don't recruit here. But there's always a way. We'll see. Like I was saying earlier, I got into my machine learning and finance book yesterday, and I think this is going to be one that's going to require multiple reads of certain things, because I have to go back and like look terms up and stuff sometimes. I asked you earlier, but I think you're busy. Do you have office hours that you keep? Okay, so we trade the 2 or 3 hours that we have here in the morning, right? It's 2.5. When we stream, so I'm always available to chat when we stream, usually, unless it's like a really tense, crazy market, right? And then after that, I do a day job. So like almost immediately when I stop the stream, I go to the day job and we do our morning stand up, right? So then I'm working my regular job until 5 o'clock, right? And, kind of depends on how things are going there. Because sometimes it's like I am just balls to the wall, typing as fast as I can, coding things up because I know what to do. And we know what's going on, and we just got to get it done. Sometimes I'm waiting on somebody else, and sometimes I kind of have to sit and think about what is the right way to do this particular thing and think it out a little bit first, right? So I do get a lot of breaks. So if you send me a message on Discord and ask me a question on Discord, you usually get an answer within a day. Although Discord changed things, they send message requests now, and it doesn't show me the message requests, which I hate. Actually, is there something for that in the settings? App settings, notifications. No, it doesn't. It just doesn't notify me for message requests. It's really annoying. So I haven't been as on top of that since they changed it to message requests, but I try and answer everybody because I feel that the advantage that I have, the thing that kind of makes me valuable is that I can give you the time, right? If I was, had 100,000 viewers, then I would probably get messaged all day and I wouldn't be able to do that. But we're still small and what we're doing is really niche, and so I can take the time to talk to people. And it's the same on the stream, right? I try and answer every question that's here on the stream, and so it's a really, really good resource when you're a newbie and you're just getting started and you're like, oh, I have a problem with the chart, and I know exactly the answer, right? So yeah, kind of varies after that. So that's what I'm thinking about today is like, well, I would like to try and do Akshay's thing. I don't know why that would make, what that would look like, but it sounds fun, so we might as well try it. But I don't know if I'm going to have the time to do it today. So we'll have to see. It was like this. So I read this machine learning and finance book, and I read it on the couch, and this is just not a book that you necessarily read on the couch. This is a book that I think I need to have a computer open and a notebook open and like writing down notes and stuff like that, and like building, like basically what I have to do with these kinds of books, with graduate level books, is I have to take notes while I'm reading the book as if I was sitting in a lecture and in a university class, and say, okay, so here's supervised learning and unsupervised learning, and I have to have the strict definitions of these all memorized, and so on and so forth. And like, I'm not as knowledgeable about I'm not as knowledgeable about Greek and Roman symbols, so like I can see, okay, so this is volatility and this means this. But like when you're reading it out, it doesn't make sense to you. You have to memorize what those symbols are, I think. Just mindlessly go blank in your head and mindlessly and then pretend you read it. Well, so the other thing that I think that you have to do with a book like this is you will come into a spot where your brain just kind of shuts off, or you're not completely following along. Like they might give you like a specific example that seems kind of hard to follow. And in those instances, I found, at least for me, that what helps me the most is to just keep reading. You keep reading and you try and pick up as much from it as you can on your first read. And when you understand the full content, when you go back again and you read portions again, it makes a lot more sense to you and you can follow it a lot more closely. So I'm on that too, because this book is going to have a lot of examples. So I'm going to have to program some things up. Because Matthew Dixon, he's done a lot of stuff with using machine learning for market making, which is kind of interesting. But so, well, I tell you what, the original trade, when we came in here, it was like, well, I could maybe buy it, but I don't really see a reason to, and I'm going to go shovel the lawn. And then as soon as I shoveled the walkways, it jumped up. And then I looked at it again and I said, no, it's still, I don't like it. I really could have taken something after that news, and that would have been really good. But right now we're kind of in a chop area. And if I had tried going long when I came back, I would maybe be a little bit underwater / frustrated. So I think it was the right choice to sit on my hands. Yeah. I know it's a tough thing though, because there's all that, and then there's like, where would your time be best spent? I feel like right now that this book is where my time is best spent, for sure. That's the thing I'm most interested in, and when I start reading it, it's just like, oh, that's so. So you know what I was reading about yesterday, and I had actually read that chapter before, so I may have talked about this before, but kind of reminded me about it. But it talked about entropy. So they define entropy as like the amount of information there is to have about a system. So if you have a coin, and it's a completely weighted coin, so that no matter what happens when you flip the coin, it always ends up being heads, right? Then the system has no entropy, because you just always know what the value is, right? And that's it, right? And as the value, as the coin becomes less weighted, right? It's like a parabola. where there's more information in the system, right? So the more random it becomes, the more information there is in the system, right? Which kind of suggests to me, I think, that in finance, and I think that this is what the writers of the book were trying to get at, was that like one of the reasons why machine learning can be really valuable is because they can come in and find trends and patterns in data where like you have like a bunch of different like data series but not very many samples, for instance, right? And so how you're not like analyzing one single price series over at many years. You're looking at like 100 different variables over this month or something like that, right? And so that's a system with a lot of entropy. In other words, markets are very random, very random. Ergo, there's lots of entropy. Ergo, it's going to require a lot of information for you to make accurate predictions. And the way that they presented that using information theory, I thought was so effing interesting. So I hopefully can get myself reading that more often. So I feel like I have so many things I gotta do this weekend. Well, I gotta finish my video. I gotta finish writing the strategy PDF. Yeah, we're talking about Shannon entropy. Yep, exactly. So I got to finish writing the PDF and got to edit the video so that we have a video on Monday. But then I should go and do my taxes. I should go and do, there's a couple of things on this list that I can do that I'm not doing right now. So it's not enough time. And the funny thing is that sometimes when I do have the time, I just like, oh, I don't have anything to do, and I just sit and do nothing. What do you mean, how does stocks influence the S&P? The S&P is an index of the stocks, so the movement of the individual stocks, how is it calculated? Yeah, I'm nervous to see what the taxes are going to be like. There's a couple of reasons that I would probably get more than usual on my taxes this year, but also like your returns are like down overall because the tax credits changed and stuff like that. So we'll see how much it is. Because what's been happening is my wife has not been working because, have a baby. So she's been on leave for a year. And, it's like 20% of your income or whatever it is. So, maybe less than that. But I digress. That's enough. Is enough to make a difference on a month-by-month basis, right? But we were smart and we had a bunch of cash saved up to hold us through that. And we're kind of getting to the point now where we've used that. So I could do all those things and then I could probably relax about that stuff. Because it's like right now, it's like I have to time all of the bills and everything correctly or it doesn't work out. And I hate that. Take the free float market cap of all the constituents and add them together, divide by the divisor, and you get the S&P-500 index value. There you go. I didn't know that. I was about to say and know the exact specifics of how they do it. I remember there's this whole thing about different indexes are weighted in different ways, and I don't know the exact specifics of it for the S&P. So, okay. So anyways, all of that was to say, I don't know if I'll backtest your thing for a few days, maybe next week. And I really want to do this. I want to do a study on the distribution of orders within a time period. If there's a change in the distribution of the size of the orders in a time period, does that predictive of movement, order flow imbalance? It could be a good indication for us. it could be just completely random noise, but I'm really interested. It's been a while since I've had an idea like that I'm like, we should look at that. Man. Your wife fell 3 weeks ago and broke her ankles. Yeah, it's tough. You know, it's really annoying because for me. So here's why it's annoying to me. The reason it's annoying to me is that I want to put like $500 a month into a Roth IRA. That's why it bothers me. and instead I have to kind of schedule all of my bills and everything. It sucks. So if you get the tax return and then you don't have that problem anymore. But she is gonna, she's got 6 months because the baby was born in June, so she's still got a ways to go before she has to go back to work. And then I don't know how she's gonna do that because it's like, when she goes to work, sometimes she has to stay overnight, or she's gone all day, and I'm working, and we don't want to pay a babysitter, so that's a whole other thing. No, I don't stream with other people. I'm a site reliability engineer for a Medicare website, is what I do. So what that basically means is I help them move applications to the cloud and make sure that there's good monitoring for them so that things stay up. Is what I do. Okay, I really better go though. I will see you guys tomorrow, Friday. We do have some big numbers tomorrow. We got like a PCE number tomorrow, right? So that's important. I'll see you then. In the meantime, stay